The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, this is Basil Chapman, Tiger Technicians Hour, usually at noon. This is being recorded at 8. It'll be replayed at noon. So we're looking at the close yesterday of the Dow, 25,962. The futures are down 151 right now. This is the Dow futures. The S&P yesterday closed up very strongly. It was at 2854, a new recovery high. All-time high was 2940. So this is pretty good, 2854. We're looking at the E-mini futures, S&P down 14. And this is going to be very interesting because the Qs, the NDX 100 trading vehicle, had a spectacular day. It closed at 182.57, trading right now at 181.97, down just 60 cents. Look at that green candle. On the left is the daily. Right here is the weekly chart. On the right is the monthly. What I am looking at, and this is going to be very important, is that the IWM and the Dow have been the weakest of the indices. There was a nice rally in the IWM, the Russell 2000 iShares, and it closed at 155.27. Now it's at 154.31, down 96 cents pre-market. Now, of course, if these are the prices you're looking at or worse, in the noon hour, that says that yesterday's rally was an aberration and that we are making some kind of a short-term top here that could use time, maybe price because of the choppiness. We could see just really whippy action, but within a trading range. Let's just go through a couple of other things that are very important. Look, the TLT soaring into the 123.95 area. Now it's at 123.99, up $1.04. That's up a point from yesterday. And that is just telling us that interest rates are, I mean, look at the TNX. I wonder if I've got it updated. TNX right at the close yesterday was 25.37. I'm not sure. Let me see if I can go to the bonds, current bonds. Let's see, U.S. trading. Oh, look at that. Up almost a point at 148 and 3/30 seconds, and it's only leg C in the daily chart. It breaks above 148 and 7/30 seconds. The high today is 148 and 6/30 seconds. So it goes just a penny above the high of the week of January the 4th, starts leg C in the daily, in the weekly chart. This is very important. The crude oil at this stage is trading at, there we are, minus 67 at 59.30. This is going to be very important because it's at leg C, making probably a peak C, could go a little higher. But it did hit 60-point continuous contract, 60.39 yesterday, trading at 59.25. So far, the weekly chart looks very good. Let's look at the IYT, which is this is the iShares Dow Jones Transportation Average Index Fund. Had a very strong session yesterday. Probably going to give some of it back today. We'll see. But at 185.08, that's just way below the all-time high of 209.44 made in September of last year. That's a divergence between the Dow Industrials and the Dow Transports. Now, what's happening? Let's see. Dow, the TNX is at 2.49. Just someone updated me there. TNX, thank you, Z. 2.4. So that's 24.90. I mean, look at that. We were at 32.48, 3.248 in October, and we've given back about 7 months, 7 or 8 months worth of rallying in just 4 months, 5 months. So this is going to be very important. So what does that say about the HGX, which is the housing sector index? And that's trading at 289.14. Whoa. So close to making a leg D in the weekly chart. This is going to be very important because if you look at a stock like Toll Brothers, down 7 cents right now, 35.67. That should be screaming higher. Why is there there are a lot of disconnects here. Rates have been very low, yet the housing market is not screaming towards all-time highs. 52.73 in Toll Brothers goes down to the 29s, trading right now at 35. Just a little bit of a bounce. Something's wrong with this picture. Something's wrong with this picture as well. Maybe it's not wrong. Maybe it's telling us something that we need to be observant of. And that is that at 110.22 right now, the SMHs, let me just double check. No, it's probably down. That's probably, yesterday there was a fantastic move up in the semiconductor index to 110.60. All-time high last March was 114.55. It plunged to 80, and in just 3 months, it's just screamed back. That is very unusual. And I'd shown the shipping chart. I wonder if I still got it. I don't think I've still got it. Let's see if I've still got it here. No, I don't. So that is, oh, that's a pity. All right, well, I don't have that shipping chart, but the shipping chart up until about January was very poor. Now, this is going to be this is key. The VIX index. The VIX index is trading at, it's at 14.28 right now. The high yesterday was 14.56. We have seen 2 days, this could be the third day of the opening looking terrible. But my short-term Chapman wave trend gauge correctly signaled on Wednesday morning that there should be a very strong 9 to 11 point rally in the E-minis within 2 days. That was correct. And then yesterday it flashed the same signal. And I don't know whether it was included in yesterday's huge bump to the upside, but it is flashing. So I'm looking at this and I'm saying if, and I said to subscribers, by 11 o'clock, there's a really good recovery from the lows that we are seeing. That's a good sign. But basically, you want to see between 11 and 1 o'clock, you want to see some strengthening. As I said earlier when I opened the show, said if the futures are down as they are right now, down a little more now, down 178, the S&P is down 17. Something's going on at 8:30. We should get one of the job report or something like that Friday at 8:30. We'll see what happens. But we have to assess this to say, is the Dow, now I'm going back to the Dow, is this choppiness with the Dow failing, probably making an arch formation here if it closes under 25,600 by Monday? Is this making a failure pattern together with the transports? And was just an aberration that you got that huge spiral in the Qs, the semiconductors, and the S&P yesterday? That's a little unusual. I'll be right back. Basil Chapman, Tiger Technicians out, Dow Futures down.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi folks, we're back. So I found the chart that I was looking for, semi-shipment breakdown going into the beginning of this year. Look at that. This is the first one, is a leading manufacturing index growth going down. And here is a semiconductor, and yet inverted, and that's what you get for the SMHs. That kind of divergence is very unusual. Is it telling us that the semis are going to have a whopper of a year this year, or is it a fake out? Anyway, so I wanted to look at the dollar. The dollar is trading at 96.71 right now, up 22 cents. Look at the big green candles, and it's still in a nice trading range. And so far at 96.71, the monthly chart is in this sideways consolidation, but with technical still pretty strong. Stochastics at 83%. MACD's good. The weekly chart needs to see the MACD cross positive. It hasn't done that. Stochastics only at 67%. Yet the price is holding very nicely over the 9 and the 14 period exponential moving averages. And it just further went to 97.71. The exact high, this is the index itself, the exact high of the week of the 14th of December. On that was a Chapman wave double top, and it pulled back, and it should have, once it goes 1/3 to a half below the median of this high of 97.71 and 95.02, normally you would get a pullback all the way to the bottom, and this stalled. It hit the 95.60s, and now it's trading at 98 and 96.72. This is good action. Look at the gold. There are a couple of periods every year, as far as my notations are concerned, where gold and the dollar move in the same direction. It's usually like for a couple of weeks, and then they go into counterpoint, like a buck counterpoint, where the one melody goes up as the other goes down. And now they're trading kind of, in a certain sense, they're trading in the same direction. Just the last couple of days, gold is up 4.2 at 1,311.70. That's good action. It's holding the 9-period moving average in the weekly chart, treats the 14-period, that black line, as support level. The 200-period exponential moving average, it's just above it now. So I think that gold is consolidating sideways, making stair step move, higher highs and higher lows since the 1167 low of last year. Good action. Is it telling us something? Is there some nervousness out there? We'll see. because if gold suddenly starts to trade in the 1335 area over the next week or two, I think that's going to be very important because it makes that 1350 level a magnet. If it pulls back, goes under 1300, that's fine. If it goes under 1280, not good at all. But so far, it's just in this range. Very good. Silver right now is trading at 15.45, up 0.013. It made a leg C in the Chapman wave, always looking at the fourth highest leg, leg D. It did do that. MACD's good. Stochastic's okay at 51%. Haven't really got a buy signal to buy mode. Is a buy signal, but no buy mode yet. Still kind of stuck in a rectangle formation. Silver starts to trade in the 1585 area. That'll be very good. If it holds in the 1585 area, that weekly chart will start to improve. That MACD will deflect higher, and silver will be moving quite a bit higher. If it pulls back under 1520, be careful. Underneath 15, it's a big problem. Closes under 15. So, a couple of things I want to look at as well here. I wanted to show you something. Look at wheat. That's wheat. Wheat is trading at 469 and a quarter. It's up 2 3/4. We've been looking at that for my subscribers. We are long the grains in a particular ETF. This is nice action. It's not great, but look, the 9-period moving average, this pink line, because it's pink on the way down, is about to cross the black line, the 14-period moving average. That'll be a good sign. MACD, I'll just circle this to demonstrate here. Very nice action, very big, wide distance between the 9-period differential and the slow-moving average, the red one. Look at the stochastic now at 87%. I love that. That's very good. That says that the 461 to 461 to 459 area should be good support in any pullback. Look at the soybeans. Soybeans have moved quite nicely. They have made a leg B. MACD is very good. Stochastic's improving at 52%, but and it's trading at 908.5 down to until I see it in the 914 to 916 area. I'm going to say, yep, it's a good start. The weekly chart is much better because it didn't make a low down the 848 area. The low, most recent low was about 8. I'm just guessing about 888. So trading at 914 right now. Sorry, 908.5 right now. That's very good. If we can get up into the 916, 914 area, then it starts to test the weekly moving average resistance. Goes above that. That's very good. Look at corn. Whoops, don't type it on the chart. Type it right here. Okay, corn. Fabulous move today. Up 3 at 379 and a quarter. I like this. This is the kind of move I love because now I can start talking about left side, right side price time match in a T formation. And that has already broken resistance levels. The next one is up there, probably testing at 380.5. Yep, we're really close. And then there's the major one at 385. I don't know if it's going to get there right now, but that is a fabulous action. Now, what I meant by looking at the soy chart where the arch formation in the weekly chart didn't even come close to the bottom, this one took out the low of the week of 21st of September. 364 was the low. This low was in the 361 area. It's the 361 exact. Trading right now 379 and a quarter, up 3. Nice action. Monthly chart is not looking very good. So that's what I wanted to show because I like to see that within the market itself, there's a rotation through different sectors. And that rotation through the different sectors is saying that you can look at money having a place to go. Otherwise, what you get are those 95% Joe Granville, Joe Granville used to talk about bear market phases where the majority, almost all of the stocks go down. So we haven't seen that for a little while. So I wanted to also have a look. I wonder if Tiffany has come out with its earnings. Wasn't Tiffany coming out this morning? Whoa, down 4. Look at that big move to a peak, a leg F. In the Chapman wave, you've got to be real careful. In leg F, especially if the technicals are deteriorating. But then, yeah, the technicals are not too bad. But it is trading at 95.65. The low yesterday, the open and low yesterday was 96.49. Tiffany is a warning to say, hey, I don't know what they're telling us, but that's not such a good sign. Fabulous move up until now since the December-January low, from the 72-ish area all the way to 100, and now it's trading at 95.50. Got to watch that closely. So this is the 8:26 time frame, Eastern time in the morning. This is being pre-recorded so we can play it again at noon. Basil Chapman for the Tiger Technicians Hour. I'll be right back, and we'll get the 8:30 opening. Let's see if the E-mini futures are trying to... Yep, a little bit of a turn here. Let's see what happens. We want to know what's going on this time. 4 hours later, when the show gets replayed.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi everyone, Basil Chapman, Tiger Technicians Hour. This is 8:30, and there must be some kind of news coming out. I don't know what it is. I don't have any way of knowing at this particular point. What's really important is what happens in the market. Dow futures are down 17. The Dow futures is down 181. S&P is down 17. They haven't had too much change from what was mentioned at 8:30. So I suspect that so far it isn't overly bad news. Maybe it's good news. We'll see. A couple of things that we're looking at here. You remember what I was talking about earlier on is what happens in the volatility index. And the VIX index right now is trading at 14.32, and we've had 3 sessions, early morning sessions, where there's been intense selling in the futures. And we saw what happened yesterday, how there was this reversal, the spectacular gain with the Qs. That's the Index 100 trading vehicle. The SMHs, the semiconductor index, and the S&P went to new recovery highs, not all-time highs, but new recovery highs. That was really important because now we don't know, was that a fake out, or was the Fed story when the market reversed sharply? Well, it pulled back, then it went up sharply, then it reversed back down and went to a lower low on Wednesday afternoon. Which one was the fake out? My thinking is here we're getting into a period where politically, economically, geopolitically, I think we're getting into a kind of a tough period for the next few weeks. But I am anticipating there is a chance that we could see some kind of a rally. I'm not sure if the Dow can make a new recovery high. Let me explain what it is. Going back to the VIX, we'll see whether or not at noon, let's say in 4 hours' time, at 12:30, that's p.m. Eastern time, whether the VIX is trading at the 1432 or higher or above the 1456 level, or start to pull back just as it's done for 3 days in a row, and it's going back under $14. We'll see. We just don't know. But I have this Chapman wave trend gauge which suggests that there should be a 9 to 11 point rally from a low. Doesn't say which low. It just says be careful, because it could, if you're about to short, you should maybe wait for some kind of sign to say that any rally is going to dissipate very quickly. I'm looking at this and I'm saying it's very unusual to have this kind of divergence, but it's saying that the defensive area maybe is not quite so great right now, but that the volatility to the upside is favoring. It did from Wednesday and Thursday. It favored the Amazon. Look at this Amazon. Let's see where it's trading right now. Probably down a little bit. Yep, down 11. Had a spectacular run yesterday. Look at these green candles. One little baby red candle amongst the 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. I think it's 10 up days. Surely you could have a little bit of a rest. But what if at 1807 right now, down 11, all of a sudden it's trading at, it's only down, it's like 1812, and then maybe 1814. So for subscribers to my opening call, I've got a plan for today. I'm not sure it's going to work. We'll see if it can work. But we've had some really nice trades. We did get stopped out of one position yesterday, but other things have worked extremely well. Now I'm looking at this, and I'm saying this is tying very well to what I want to do for my webinar coming up a week from Wednesday on April the 3rd. Here it is, the opening call by Basil Chapman. Live subscriber event announced Wednesday, April the 3rd at 5 p.m. Eastern Time. Anything goes. The stock market's key phase. The anything goes means that there are so many parallels with the 1920s. It doesn't mean to say we have to finish the whole thing with a crash like 1929, but it just says that every time I talk about this, I have to add more and more aspects of what I think is the period of excessivity. It goes together with cussing, drinking, smoking, showing off, crazy things, saying whatever you want, because who cares? And that only occurs when the market really keeps going higher and higher. If the market at this point was, instead of being Dow 25,900, it was 15,900, that's a different aspect altogether. So I'm going to be discussing this in relation to the market itself, in relation to the geopolitical, socioeconomic situation. I'll also show you what techniques we'll be looking at, what particular, like the moving averages, like the MACD stochastic, what we'll be looking at. I include the FANG stocks. This is going to be, for me, a key measure of where we are at this particular time. Hey, news, and if you read the New York Times every day, or any of the, let's say, the newspapers on the Northeast, you would think that the stock market was actually down in the 15,000 area. You would think everything was bad. But the stock market is a measure of something, and it's a measure really of people's focus on a specific area, and that in this case is the stock market, in real terms. In other words, money is going into the market. It doesn't matter. You don't have to care how or why or where until a certain point is reached, but it's getting there. So when I talk about my cash index, Syntas, which is overalls, uniform rentals, trading down 7.80 right now, down at the 200 level, makes an all-time high of 209.64 the week of on the 4th of March of 2019. No, sorry, 217.34 in September of 2018. The last high was, and then it goes all the way down to the 155 area, and then screams 54 points higher, and gets to the high of 209.64 on the 4th of March, pulls back sharply, holds the 199.70 area, has a peak ABC. It's a gray C because the MACD and stochastic aren't confirming the rally, and then it makes an arch formation. It's called the dreaded H in the Chapman wave methodology, and look what happens. It pulls back. Yesterday's fantastic candle with a low of 204, and it goes to the 208s, trading right now at 200.32, testing that in a Chapman wave. It's called the dreaded H, the lowercase h, because if it takes out the left side low decisively, that's a negative. So that's one thing. A is Amazon, which we just looked at. Fabulous move, certainly from the low that was made back at 1,363. Was that the correct? I thought it was a round number. Let me just check that out. 1307 was a round number. I don't know where I got that from. 1307. Let me just change that. 13007 R/N, round number low. Great. I mean, look at this. 1307 to the 1820 area in just a couple of months. That's fantastic because it came down in the same speed. But this is really good action. I didn't know. I don't see why it should give it up like that. S is for the SPY, which made a new recovery high yesterday. It's down today, so far early, down to $1.48. Look at that. Breaks out, and look at the Home Depot. What a day yesterday. Huge move up 3 points to 189.97. Fascinating market. I'll be back. Basil Chapman, Tiger Technicians Hour, talking about my April the 3rd webinar.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Hi, everyone. So we're looking at Home Depot. It makes an all-time high of 215.43 week of the 14th of September. Takes a little bit of a dive, goes to the 159 area. Yeah, 60 points. And then it rallies to the high that was made right here on the 25th of February, 193.42, pulls back to 179, I think it was. Yep, 179.52. And here it is at 189.97 after a dreaded H successful test. H pattern goes to a cup formation. This is good action. So I'm suspecting this is, I'll give you a scenario. I'm looking at this and I'm saying there is such a diversion between, say, the transports, the XAL, the airlines, which you can understand why. 97.61 up 60 cents right now, but look at this H pattern. Is this going to be a successful, it looks like an inverted V, but we'll call it a dreaded H. Is this successful? And instead of breaking under 96 over the next week, there's a bounce, at least a bounce to the 98s from the 97.61, sorry, to the 99s, maybe even the 100 area, maybe even takes out the high of 100.70, or does it completely fail? And the next thing you know, transports are saying, oh, we can't even take the strain here. This is terrible. Boeing is trading down 350. That's a bit of a drag on the Dow. But at the same time, I'm looking at this and saying, considering what's going on, the 363 low that was made 7 sessions ago after being at a 446.01, an all-time high just on the 1st of March. This is saying Boeing, not that the worst is over politically, socially, maybe even not economically right now, but the price is held up. So maybe it's stuck in this range. I wouldn't be buying it right here. I'd wait for a little bit more evidence of strength. But just if it's found out that they were liable, that liability will be the number of passengers times multi-million-dollar claims potential. This is just not good for them. There was a question someone asked just recently: Has Boeing made its high? Is this its high for a very long time? I don't think I can answer that. They've still got orders going. Yeah, the backlog is incredible. But when airlines start to cut, now the people have pulled out and said we're not taking the orders. To get back in line, they have to go back at the end of the line. I think most countries are going to be very skeptical. They're going to be saying, let's just keep our orders there. We don't want to do anything. We don't want to lose our place. And you can bet that Boeing's going to put every dollar they can into trying to rectify this. This is not an easily rectifiable situation. Even if they get the plane right, there's going to be a whole testing period, etc. So the cost could be quite extensive. So that is impacting certain areas. I still think there's a chance, especially with the Chapman wave trend gauge flashing again, of a bounce today. So I'm going to repeat again. If by this time this afternoon, when the show is replayed between 12 and noon Eastern time, if the futures they're coming back a little bit, now down just 14. If the futures are now maybe -10 to -9 or -8, I think there could be forced buying with people saying, oh, nothing takes this market down. I've just had it. I've got to get in. Otherwise, good grief. So we looked at that. Let's look at Google. That's GOOG. I'm not looking at Alphabet. I'm looking at Google. Down just 5 after a spectacular 3 sessions, trading almost the all-time high is 1273, plunges down to the 970 area in December, and now it's back again. Look at this beautiful. It's even in a shorter time frame getting to a higher high. So the next level of big resistance will be at 1253. So this is excellent action. So it seems to me that the high PE stocks are going to do very well, the tech stocks, in this environment. So that's what we're looking at. If you're looking at something like a Raytheon, it's just stuck in this lower range, and it's trading at 181.95. So we've got to be looking at defense. Look at Johnson & Johnson, dollar impacted. It's had a really good bounce since the low that hit the 200-period moving average back at 120, was it? 121 exactly, a round number low. Oh, I forgot about that. Did I put that in? I think I did. No, I didn't. I didn't even see it. Johnson & Johnson made a round number low. I love those round numbers. 121 on the 24th. See, some stocks made 121, round number low, 12.24. Some stocks made their, and indexes made their low on the 24th, others on the 26th. Remember that, the 26th, you got that horrible session down over 400 points in the Dow when it looked like there should have been a bounce. Instead, it just absolutely threw up and went lower. And now 121 to 134 at this particular time after hitting a high at peak G in the Chapman wave. Is that a G? Yep, that's a G. Right there in the 140 area. Oh, don't tell me that was a round number. No, couldn't it be? 140 round number high. Unbelievable. Another technique in the Chapman wave methodology that I missed using. Round number high. Unbelievable. But it's held very well. So we're looking at Johnson & Johnson holding well, considering what's been going on in the market with the whippiness and what's going on with the dollar. Let's just look at the dollar again. We found that between 8:30 in the morning, actually it's more like 7:30 in the morning to 9:30. It's almost like a trading day. And anyone in the den, would you not agree with me that early in the morning till about the open, you could have a whole day's worth of trading. It's just amazing what's been happening. So yeah, Johnson & Johnson, dollar right now is still holding well, 96.69. See what gold is doing. Gold is up 3.9. Also just right in there, it's very interesting. Both of them going up. TLT was 123.50. Now it's 124.01. Oh my goodness. Surely Toll Brothers should be pre-market, should be up, not down 7 cents at 35.67. Doesn't this help? That's the dichotomy that I'm looking at here. Lower rates should be getting people into houses. But of course, if you live anywhere in one of the areas that have had a spectacular gain, even just 2 years ago to now, it's been amazing. Here in the Northeast, even though there's been a slowdown, it hasn't done very much. It's not a real slowdown. Yeah, now it's more a buyer's market than a seller's market. So you're not getting people, as I hear it, you're not getting people vying for it and bidding up prices even before. You know what they did? There were times where nobody could see, not even the real estate agents could see the house until the day of the open house. So there wasn't, you had to make your decision, and that means your realtor that maybe went with you to help you hadn't seen, couldn't do they had only guesswork. They couldn't do all the work beforehand. Wow. And then you have to bid on the spot. And people were giving up the inspection Can you, in the Northeast, when you've got this kind of weather, you want to give up inspection when you could have cracks and mold and whatever? Wow. Anyway, now that's changed a little bit. We'll see what happens. And that actually goes to a question I had, and I'll talk about it when we get back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Hi, folks. We're back. Basil Chapman, the last segment in the Tiger Traditions Hour. This is pre-recorded at 8 o'clock, so this is now 8:54, and it'll be at 12:54. At 12:54, between noon and 1 p.m. this afternoon, if the Dow futures have come back from -14 to -8 or -7, that's going to be a good sign. Dow is down 164. It needs to come back to about a -70. That's -60. That's going to be important. And the reason I'm saying that is that with the S&P, the Dow, with the S&P, the Qs, and the SMHs making new recovery highs, the Dow lagged. Can the Dow make its way all the way back to at least a leg D above 26,109. We'll see if that's possible. I think there's a chance, as long as we don't close the day out with a down -200, it says that there's a chance we could have that kind of counter-trend rally. So a question for Jane about real estate. I'll deal with that on Monday, but my thinking is there's going to be a softening of real estate, even though the rates are real estate prices, not the buying or anything like that. We'll talk about that more on Monday. But at this particular point, that's what I'm looking at. The dollar's held well. Gold is holding okay. It's a very interesting market right now. Watch the VIX index. the VIX index is trading at, let's see, 14.25, up 62. If this time, 4 hours, in 4 hours' time, if the VIX is trading above 1430 and the market is down, that's very little chance it's going to have a recovery at the end of the day. But if the VIX starts to trade for 30 to 40 minutes under 14, I prefer to see under 13.95. That would say, hey, now there's a chance for a bit of a bounce. And if you look at that, it's unusual to be able to go to new recovery highs in those three key sectors: the Qs, the SMHs, the semis, and the S&P 500 without the Dow. And that's going to be a big thing to watch. So Larry Pesavento is back. I believe he's got his guest, Norm Causey to the Minute Winsky, coming up in Astro Trends. And if you're listening at noon, you've got Steve Rhodes coming up, and then Dave White, and then Tom O'Brien. Have a great day. Check out my opening call and my webinar coming up on April the 3rd, called Anything Goes. I'll be back Monday. Have a wonderful weekend.